ETHZ has been showing a decent amount of strength within a longer term neutral trend. As of yesterday, the 27th, it had printed three straight session of gains, up 7.02%. This is Tuesday, the 28th of October, pre-market session. Yesterday's pre-market session, yesterday's regular session, it printed an intraday high of $24. Yeah, okay, this is the stock. It's rising from, I think it's 52-week lows. And the extrapolation is saying that the strength it picked up since the 23rd of October, that was a Thursday, that is expected to remain in place at least up till Wednesday, the 29th. Then after that, there might be a contraction before the uptrend resumes again. Okay, let's see what we have. Yeah, it was okay. It wasn't a 52-week low. It wasn't a 52-week low. Okay. All in all, it's just more of a consolidation, if you like, all the way towards the 5th of December. Okay, so I think it's probably trending. Okay, the 10-day moving average is trending. Positions opened 10 days ago are still in profit. The ones opened 21 days ago are not in profit yet. And we still have negative derivatives on those moving averages, yeah, on those indicators, because the stock is it was depressed before now. It's just rising from just recovering from the lows of 15.65 as of began to recover from the 23rd. Yeah, let's see. Is it are they improving? Let's see what are those improve. Yeah, those values are improving. Yes, the momentum is improving, but the pace has decreased. Momentum is in, they're buying, but the buying pace has decreased as of yesterday, the 27th. Let's just quickly glance at it. Okay, we have projections here. We have $24 intraday high that printed yesterday. Currently, the price is at 22.1. Do we have upper projections here? No, we have just really seriously bearish negative downward projections. Before now, as of the 7th of August, there was $42, $42, and it did also downward projection of 8.78. Let's just quickly have a look at the 4-hour chart and see. On the 4-hour chart, the extrapolation here is saying that, yeah, it's going to the contraction of that expansion, the expansion that began on it actually began on the 22nd. So it's the algos are saying that it's going to, the contraction, which is actually somewhat in effect right now, is going to continue up till the close of today's trading session, and then after that it may bounce. But there's no guarantee that that will be the case. Projections are saying 19.55. It's a down projection, but we have, I think, upper projections here. Let's see, 20.74. It's a down projection. 27.60, 29.36, 30.44. These were printed as of the 8th of October. 30.44. Okay, yeah. Yeah, 30.44, 29.36. Yeah. Okay, price pressure momentums. I think the 10 and 21 period moving averages are trending right now. A different picture on this 4-hour chart. The 4-hour chart is a lot more active. It's a magnification of the tip of the daily chart. So the stock was trending yesterday the 27th at some point. Let's find out what's going on.
What's happening with ETHZ? 1. Reverse stock split. ETHZilla announced a 1 for 10 reverse stock split, implemented as of October 20, 2025. The split reduced the number of shares outstanding from about 160 million to about 16 million per company press release and boosts the per share price accordingly. The stated purpose? To make the stock more accessible to institutional investors, many of whom have minimum share price or collateral thresholds, rather than for compliance with listing requirements. Immediately following the announcement, there was a drop in share price, about 5%, likely reflecting that some investors viewed the split as a warning rather than purely positive. 2. $250 million stock buyback and growing ETH Treasury. ETHZ approved a buyback program of up to $250 million of its common stock. At the same time, the company disclosed they now hold approximately 102,237 Ethereum, average acquisition around $3,948.72, valued at approximately $489 million. They explicitly link the buyback and treasury strategy. By accumulating ETH and reducing share count, raising share value, management frames this as aligning shareholder returns with the ETH treasury thesis. They also funded recent ETH purchases via at the market offerings and other equity issuances. 3. Dilution/convertible debt concerns. Despite the buyback, there are significant concerns from investors about future dilution. ETHZ disclosed the potential offering of up to 74.8 million convertible shares, which could increase outstanding shares by as much as 46%. The market reacted strongly when shares plunged about 30% when the dilution risk surfaced. 4. Pivot/business model and Ethereum exposure. The company formerly was 180 Life Sciences, a biotech firm, and it rebranded to ETHZilla in August 2025 to focus on being an Ethereum treasury vehicle. Its value now is principally derived from its ETH holdings and yield generation strategy, rather than a traditional operating business. That means the company's fate is tightly linked to the price of ETH and the success of its treasury and yield model. What the community is debating: upside arguments, accretion via buyback plus ETH appreciation. Advocates argue that with a large ETH stash and a buyback reducing share count, the ETH per share ratio could increase materially, meaning each share represents a larger slice of the underlying ETH value. Institutional access via split. Some traders see the reverse split as a strategic move that may unlock institutional capital, which could bring more stability, liquidity, potentially higher valuation. Crypto treasury narrative. The concept of a public company holding ETH and generating yield is novel and appealing to some investors who want exposure to Ethereum through equities. Concerns and skeptics. Dilution risk. Many are wary that despite the buyback headline, the convertible/ATM issuances could swamp any share count reduction and dilute value for existing shareholders. Reverse split stigma. Reverse stock splits can sometimes signal underlying weakness, low share price, risk of delisting, etc. Some view it skeptically rather than as purely strategic. Execution risk and model uncertainty. Transitioning from biotech to crypto treasury is a big change. Questions remain around management's experience, governance, regulatory risk, and how reliably the yield strategy will perform. ETH price risk. Because ETHZilla's is heavily correlated with ETH, a drop in ETH price would hit the company's NAV and therefore potentially the stock. The treasury vehicle model magnifies crypto risk. Timing and market sentiment. Some argue that the market has already priced in much of the good news, and with dilution hazards present, the risk reward balance may not favor aggressive entry. Implications for valuation and strategy. The ETH per share metric. One useful lens is to consider total ETH holdings plus cash equivalents divided by shares outstanding, adjusted for the split. If buybacks reduce shares and ETH appreciates, the NAV per share theoretically rises. Buyback versus issuance. While buybacks can boost share value if executed when shares are undervalued, issuing new equity/convertibles undermines that benefit by increasing share supply. The net effect depends on which dominates. Corporate capital deployment versus treasury risk. The company is reinvesting in ETH, granting exposure to crypto upside, but also crypto downside. That contrasts with typical buyback mechanics, where cash flow is relatively stable. Here, yield generation is novel and unproven at scale in this wrapper. Institutional access dynamics. If the share price post split rises and volume and liquidity improve via institutions, it could reduce volatility and enhance valuation multiples, but only if fundamentals back it up. Short term versus long term outlook. Traders debating buy the dip are focusing on near term catalysts, split effective day, buyback start, ETH price moves. Others are taking a longer term view, model execution, regulatory clarity, share count dilution trajectory. What to watch next? Quarterly or interim Treasury updates, changes in ETH holdings, average acquisition costs, whether yield generation is performing as planned. Convertible note slash share issuance disclosures. Any filings increasing share count or new ATM offerings will impact the dilution sentiment and could be negative catalysts. ETH price movements. Given ETHZilla's heavy ETH exposure, large swings in ETH will ripple into the company's NAV and therefore potentially the stock. Liquidity volume changes. Post split, watch whether the stock becomes more institutionally tradable, that's higher volume, lower spreads, or remains largely retail or hype driven. Management commentary and transparency, especially how management frames buybacks, treasury strategy, risk controls, and governance. Summary: ETHZ is a high beta speculative play on both the crypto market via its ETH holdings and the equity market via buybacks, share structure, and institutional access. The reverse split and buyback announcements have lit a debate. Some see it as a structurally positive re engineering of the company. Others view it as headline ambitions masking real risks like dilution, governance, and crypto volatility. If you believe in Ethereum's long term trajectory and are comfortable with execution risk, the stock could represent a unique entry point, especially if the ETH per share value closes in. If you're more cautious, the intersection of corporate transitions, crypto dependency, and share structure complexity may argue for waiting until execution proof emerges.
Okay, thank you very much for watching this video.